Hi, this is Michael Ogechi Abbey with Enterprise Express Tax Service. This is the 2024 update for Uber or Lyft, Doordash or Grubhub or anyone who provides a service in this logistics industry, ride sharing, for instance, and you get issued with 1099s for your taxes. This is an update. Very important. There is a document that's usually missing when a lot of my clients who are in this gig economy ride sharing area, when they bring those documents to us for processing, they usually do not provide us with the annual summary. And there's a good reason for this. When you log into your ride sharing app as a driver and you download your tax information, typically you go into the app, you go into your, I guess, your partner earnings session or information, and then you would download your 1099s. Now, let's go through what you actually need to provide for us. You need to provide to us the 1099K. You need to provide the 1099 NEC. The 1099K breaks down earnings per month. And you'll see it says boldly 1099K, and you'll see the earnings broken down per month. So if you, for instance, didn't earn any income in January or February, there'll be zero there. And then the rest of the months where you earned income, it'll show all that information as you earned per month. Um, the 1099 NEC usually shows what was paid to you. Sometimes it could be as a bonus. It's the any additional earnings outside of your regular earnings. And that's what the 1099 NEC does. It used to be the 1099 miscellaneous, and then it was changed to the 1099 NEC. Okay, and then sometimes you may also get an additional 1099 miscellaneous, but that's very rare. I hardly see people being issued with a 1099 miscellaneous. So the two tax documents that you'll be looking at are the 1099K and the 1099 NEC, and you're also going to need the annual tax summary. That's the one that's usually missing, and I can guess why that happens. It's because you're probably not seeing a 1099 there. You may not realize that it is a tax document that you need. And sometimes it depends on which company you're working with. Sometimes it's located on a different page. So I've seen that, excuse me, I've seen that happen quite a lot. The reason why the summary is important is this. It breaks down not only your income, it shows the income that you made for the total year, but it also shows, for instance, the tolls, uh, 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 other expenses that you paid that are deductible expenses as well. For instance, it would show if you paid tolls and how much tolls you may have paid during the year that you operated as a ride share or a DoorDash, Grubhub, or any one of those categories that you may have worked in. More importantly, however, it also shows how much you paid to the company as commissions. And so let's say you made uh, $50,000 for the entire year that you drove for Uber or Lyft. Uh, Maybe, possibly, you may have paid Uber or Lyft commissions of maybe 10, 12, 13, $14,000. I'm picking these figures out of the air, but it could be anything depending on how much what your commission rate to those companies is. That commission that's paid to them is also a deductible amount. We use that on the Schedule C. And so that's why it's extremely important that you are able to provide us with the annual tax summary. Once again, it's called the annual tax summary, and you will find it on the tax information tab. However, with some of the companies, it's not on the same page as the other 1099 documents. Also realize that when you click on that tax page, it'll show your 1099 documents for not just the current tax year, but also, I think, going back the two prior tax years as well. So always remember that you're choosing, what you're bringing to us are the 1099s for the current tax year. So that's extremely important. Remember that as a ride sharing driver who earns income uh, with 1099s, remember that there's no taxes deducted. And so when you're bringing your taxes to us, a lot of times people are expecting, I'm going to get a big tax refund. No, the strong likelihood is that you're going to owe taxes because you did not pay any taxes through the course of the tax year. So that's very important to remember. Um, it's quite possible that with those large deductions, especially considering that ride sharing drivers do accumulate a lot of miles, it's quite possible that your tax obligation could be reduced. Sometimes it could be reduced to almost zero, depending on what we're looking at. But, expecting a refund back is usually not the case. Now, in some occasions, yes, this can happen. For instance, if you are a rideshare operator driver and you also have a job, a W 2 job, or a job that pays you with a W 2, it's quite likely that the deductions that you're taking on the Schedule C, which is where we calculate your Uber or Lyft or, earnings, it's quite possible that those business deductions will help to reduce your tax liability with your W 2. So bear this in mind that there are situations where, yes, very possibly you could get a refund, maybe even a bigger refund, because your business deductions are really reducing your tax liability. But remember, the reason why you would be getting a refund is that because in your W 2s, you would have been paying taxes. And depending on how much taxes you are paying, it's quite possible that you would get a bigger refund than usual. So I'm just putting this out there to let a lot of people know that the tendency, for instance, is that if you drive Uber or Lyft or DoorDash full time, there is this very strong likelihood that you're not going to get any refund. Rather, what we're going to try and do is use, legitimately, of course, use your business expenses to reduce your tax liability to the extent that you are allowed those expenses. And we do our best to maximize what we can. Okay. Also remember that I guess there are, you could, for instance, I have some drivers who didn't realize that their meals are deductible expenses. I had one guy who came in one time. He says, "Well, I don't eat out enough. It does not really going to make a difference." So I had him tabulate. The next year, I had him tabulate how much he spends when he goes out, McDonald's, um, any snacks that he buys, coffee. He had a $5, $6 a day coffee habit. Um, and when we tabulated all that expense, it amounted to a couple of thousand every year. So it builds up, and so just make sure that you're tabulating all those expenses. Another thing is mileage. There's so many apps out there now that will calculate your business mileage. We know this because we're also aware that a lot of rideshare partners also tend to use their vehicles as personal vehicles as well. And so there's a lot of apps out there now that will in a very, I guess, efficient way, divide your personal driving from your business mileage. And it's just a click of a button, and it actually, you can tell the app to start recording your business mileage or to stop recording your business mileage, and then to start recording your personal mileage or stop recording your personal mileage. And that way you have a nice way of dividing how many business miles you did as against how many personal miles you did. Okay. And that's extremely important because business mileage rates, deductible rates have gone up for this tax year. So that means more money in your pocket. Don't forget, again, I mentioned tolls at the beginning. That's extremely important. And of course, if you lease the car, okay, The lease payments are possibly deductible as well. So if you're leasing a car to use for your rideshare operation, the lease payments are possibly a deduction as well. If you're purchasing the car, the interest that you're paying on the loan is also possibly a deduction as well. And I'm using the word possibly here because I really would need, we would need to see, look at each situation individually to make a determination of what's going on and what's deductible and what's not. So I'm giving very general assertions here on what can be deducted and what cannot be deducted. So once again, this is Michael Ogechi at with Enterprise Express Tax. We do a lot of Uber tax rideshare partner returns, and it would be our pleasure to help you in preparing your 2024 Uber, Lyft, rideshare partner tax return or independent contractor. As long as you get paid with a 1099 and no taxes are taken out, that's definitely something we can take care of. Lastly, the only other thing I'm going to add to this is this. If you're in any of these categories that I've discussed, you definitely want to think about having your tax professional prepare an estimated tax schedule for you. What are estimated taxes? Well, essentially, with estimated taxes, you're paying your taxes up front every quarter. You're making an assumption that this is a total amount of taxes that you're going to owe for the following year. So essentially what the tax preparer does is we use the prior tax period to make a generalized assumption of how much taxes you may owe the following year. And with that information, we produce what's called an estimated payment schedule. It's extremely good way to manage, or rather to plan your taxes, because you can pretty much assure yourself that you're not going to owe any money because you've already paid those taxes up front. Or if you do owe, it's not going to be that much. And if you have overpaid taxes, you could then get that back as a refund or carry it forward to the following year. So I think it's a perfect way to manage, or rather plan your taxes. But again, it's a choice that you have to make, and you can discuss this with your tax professional, and he or she can give you the best advice on how to proceed forward with this. But we do this a lot. We do prepare estimated taxes for our clients a lot. So that's something that you may want to think of. So once again, it's Michael Abbey. This is my 2024 refresh on Uber rideshare tax processing. And do not hesitate to contact us if you have any questions or queries. Thank you. Bye.